The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Andy Duncan, keeping you up to date with expert opinion on precious metals and the markets.
Hello and welcome to this Gold Money Podcast with me, your host, Andy Duncan. Today I'm privileged to be speaking to John Embry, who is the Chief Investment Strategist at Sprott Asset Management. Hello, John.
Hello, Andrew. It's a pleasure to speak with you.
We're entering about the sixth year of the so-called recovery since 2007, and we're about 20 years behind the Japanese recovery. Now, the Western banks have managed to kick the can down the road this long by enormous money printing and perhaps by blocking off the exits by suppressing the gold and silver price. Do you think there is going to be some kind of paper money bubble implosion in the foreseeable future, or can the Western central banks hold out for 25 years of stagnation like they've done in Japan?
No, I think Japan was able to get away with it because it was done against the backdrop of a much stronger world economy, and as their participation in the world economy was relatively minor. So they had sort of support. Now this is a global issue, and everybody's involved in this money printing exercise to try to avoid deflation. So the idea that this can go on for an extended period of time without massive bubbles forming and then bursting, I think is highly naive.
One of the things which happened in April, I think on April the 15th, was a dumping of hundreds of tons of paper gold onto the world gold markets. Now, this may have been the Western central banks suppressing gold and silver via this mechanism. How long do you think they can keep doing this before they run out of physical metal?
Well, that's the major question that confronts any gold enthusiast, and I'm certainly one. I mean, to me, it's not a matter of what's going to happen. It's basically when it is going to happen. This has gone on, quite honestly, longer than I would have anticipated, and we are in a real battle here. And nothing demonstrated that more than the events on that weekend. It started on the Friday before the Monday, that April the 15th. And they drove the price down violently in a pure paper attack with, half the world's physical production sold in paper in the space of 2 days or less. The big Achilles heel they have ultimately is insufficient physical gold to meet the demand that's being created at these lower prices. And the question is, how long can they hold out? I don't know the answer, but I think we'll know the answer before the end of this year, probably by the fall, and I suspect then the whole issue is going to change for the better.
Now, a lot of our Gold Money listeners might be feeling a bit disheartened at the moment by investing in gold and silver. Now, it's been 18 months since gold last high above 1900 and 2 years since silver nearly touched $50. Can you offer some of our more kind of fatigued Gold Money listeners any advice on how to stay motivated, how to stay with strong hands, and how to stick with the program of growing a physical stake in precious metals?
That is a really good question, because it is absolutely crucial that people not be discouraged by what is going on. If you could sort of list the fundamentals that should have been impacting on gold and silver since silver topped 2 years ago and gold topped in September of 2011, the fundamentals are almost without exception positive. I mean, this has been a remarkable undertaking by the central banks and their allies, the bullion banks, the Western governments, etc., to discourage people from going into hard assets and keep them in the monetary system. The monetary system is failing as we speak, and people must understand the true fundamentals, and they must not give up in their holdings. If anything, if they have cash flow or extra money lying around, they should be using this remarkable opportunity to buy more.
Yeah, lots of the gold will be moving east, and maybe they have in the back of their minds a plan to confiscate gold, but they're not going to be able to because it's all being buried east of Suez by people like the Chinese and the Indians and so on. Now, their other big plan is to use QE to infinity. We've kind of gone through QE1 and QE light and QE2 and everything else, but they're now talking about tapering QE to infinity. But this will probably lead to a complete crack up of the Western economies. But if they keep going with QE to infinity, that should lead to a kind of Misesian hyperinflation. Do you think it's politically possible for the Fed and other central banks to engage in tapering, or are they just talking smoke and mirrors, and are we on the way to a kind of Western currency hyperinflation?
Well, I'm certainly in that camp. I do not believe that they can taper to any extent. I mean, given that they have been sort of going all out, I mean, the U.S. is monetizing, $1 trillion a year, which probably is the better part, if not all, of the budget deficit. I mean, and at that, the economy's barely got a pulse. And I think if they sort of basically withdrew any significant amount of stimulus, interest rates would shoot up. And the last thing an over-indebted economy could take at this time is much higher interest rates. So I think the whole thing would collapse in a smoking heap. So, no, I don't think there really is an alternative. I mean, I'm a great believer in Austrian economics, and quite frankly, and not to be sort of arrogant, but I would never have let the world get in this situation. I would have taken the recessions and sort of cleaned out some of the debt much earlier. But now we've reached this stage. We have no easy alternative. Either we take a hard debt deflation, which will make the 30s look like a picnic, or we continue down the road to a global hyperinflation, which has never ever occurred before. All hyperinflations have been sort of geographically, in small geographical areas. So we're in uncharted territory, but to me, I don't see any easy outcome. And the one asset that I feel, or the two assets I feel most comfortable holding, are those without counterparty risk, physical gold and physical silver.
Now, all of these malinvestments do need clearing, and that's going to be a heck of an operation. And some countries, particularly maybe China or maybe even Russia or maybe Switzerland, might see a gold-backed currency as a way out. Do you think that we might move towards a real, I mean, we might both agree that gold is money, but do you think we might see a state-licensed gold money, such as a gold ruble or a gold renminbi or maybe a gold Swiss franc? And if we do you think we might see James Turk's fair value for gold at about currently $12,000 an ounce?
Well, I do believe that those in the East, particularly the Chinese, I mean, they invented paper money. I mean, they know full well the risks in paper money. And they are the ones that are accumulating gold the most feverishly at this point. And I think it could very well be a ploy or a plan to back their currency ultimately and replace the U.S. dollar as the world's reserve currency, because anybody can see the advantage the Americans had in the post-war era with having the reserve currency. It's given them all sorts of power and the ability to do things that nobody else could get away with. So I think that's a very real probability. And the only way you could do it, as you correctly point out, is with a very sharp revaluation of gold upward, so there would be enough physical gold with enough money, or sort of money value, I guess, to back currencies. So yeah, I think that's a very real probability, and it's one of the things that I think about a lot. Like, what's going on now? There's a theory that one of the reasons the gold price is being pounded as hard as it is that some of the bullion banks are making a conscientious effort to go from being massively short to being long gold, and from the numbers I can see, they may well be successful in that attempt. And when that happens, then I think the gold price can get away. But it'll go up for one of two reasons. It will either go up, traditionally, because there's more buyers and sellers, or there will be a revaluation. And I would put about a 50-50 probability on those two outcomes.
Sources of information are difficult to get hold of these days. We don't quite know what's going on in China because the statistics which come out from China might be being doctored a bit. Now, the same thing seems to be happening to Western governments, who seem to be doctoring things like payroll figures and so on, and employment figures. Where do you get your sources of news from that you can trust, that you can believe in?
Well, that's a really good question. I use the expression Orwellian for what's going on in the Western world. And quite frankly, I use shadow stats service that John Williams has, and he sort of goes back and uses the old terminology and what have you for the way things were calculated back in the 70s, before the Clinton administration and subsequent administrations really altered things. And there shows a much weaker economy with more inflation. So I think those numbers are probably more realistic. And with respect to China, I'm particularly concerned about China because, as I said, with an Austrian economic bent, I noticed they're just taking more and more debt creation over there to get any real GDP growth. And I think they are falsifying their real GDP numbers. If you look at the true export numbers, you look at the power consumption, the steel consumption, the unbalanced nature of their economy and what have you, I would be extraordinarily surprised if they're growing anywhere close to the 7.5% they say. I wouldn't be surprised if it was closer to half that.
The failures of Keynesian economics don't stop at the Chinese border, do they?
They do not, and that's people forget that. The Chinese had most assuredly had an economic miracle, but they certainly dined out on the profligacy in the West. That profligacy is being reined in now because we don't have the ability to spend, and I think it's impacting the Chinese economy in a big way.
Now, moving on to other things, we recently had the annual Bilderberg meeting here in England, which was about 25 miles away from where I'm speaking to you, where the people who consider themselves the kind of global great and the good spent a few days colluding with each other about the mess they've got us into. Do you think that they'll have decided some things at this Bilderberg meeting which might affect the rest of us? And what do you think those decisions might have been?
Well, that's a good question. I looked at the list of the Bilderberger attendees, and I mean, it clearly is, there was an awful lot of financial types that were there and political types and what have you. And I mean, clearly they are the powers that be, shall we say. And I mean, I've always believed that they have sort of had an agenda that for one global, one world government. And if things get messy enough, they'll try, I suspect, to impose that upon us. But I don't think they'll succeed. I mean, the last attempt, this whole euro creation has turned out to be a massive failure. And it's much the same thought process. We're getting them into bigger and bigger entities so we can control them more easily. But I suspect that's one of the things they talked about. But on the subject of clandestine meetings, it's worth noting that just before that April 12th to 15th crushing of the gold price, there was a meeting with Obama with the heads of the 15 largest banks in North America. And I think there was many nefarious things discussed there, too. So, I think there is an attempt by the powers to be that to sort of have more and more influence as the whole economic and financial situation spins out of control.
Now, while all of these people and these central bankers fly around the world drinking champagne, the ordinary kind of Joe Bloggs on the street is currently suffering. Because of their policies, you get no interest for savings without taking massive risk on really bad junk bonds. And gold and silver, for whatever reason that we could debate for hours, keep doing the opposite of what they should do in inverted commas. Now, the future of the West, it seems to be either a kind of super Japan at best or a kind of Argentina at worst, with everybody east of the kind of Middle East hoovering up all of the gold. Do you think the average person in the street, despite gold's kind of problem, should be hoovering up as much gold as they can as well?
I think anybody who has the capacity or has assets and the capacity to sort of protect themselves in that way should be buying gold and silver here, hand over fist. And I mean, what has happened, Andrew, and it's disgusting from my point of view, is that the mainstream press, which is bought and paid for, have been going to great lengths to mislead the public. And the average guy in the street, he doesn't have a clue about the true nature of gold and why you need to own it here. It's a sad situation, but it is what it is.
You have over 40 years of experience of money management. I believe that might be coming up to 50 years under your belt. And you're one of, sorry to mention that, and you're one of the most respected men in the kind of precious metals industry. Are there any books or websites you think our Gold Money listeners should read to kind of shortcut themselves into the kind of wealth of knowledge that you possess?
Well, I tell you, I've sort of become a real fan of the blogosphere. And quite frankly, I mean, I think everybody should look at Zero Hedge, www.zerohedge. I think they should all go to Jim Sinclair's website, www.jsmindset. And most specifically, just because maybe James and I are on there quite frequently, but no, I think King World News has wonderful guests, and they basically are, in my opinion, guys who know what is going on and are telling the truth. As I like to say, Andrew, people, if they have inquisitive minds, don't have any excuse for not knowing what's going on, because there's all sorts of free information out there that's telling the truth. But if you're prepared to just sit there and be spoon-fed by the mainstream media, you're going to get this seriously wrong.
Yeah, I stopped watching the BBC a few years ago, and I feel much, much better for the experience.
Well, I can't, quite frankly, turn CNBC on here because I become irate within about 10 minutes of watching it.
GoldMoney have a lot of very sensible customers in Canada where Sprott Money is based, where you also put the Queen's head on the money, I believe. Do you have any specific advice for our Canadian listeners?
Well, no, I mean, basically, Sprott Money's a great place to buy coins and small bars and what have you. But the only advice I'm giving anybody that's prepared to take it is this is your opportunity. I mean, can gold and silver go lower? Marginally, but as I like to say, what you're talking is dollars on the downside and thousands of dollars on the upside. Don't worry about what happens in the next 2 weeks. Worry about how many ounces you control and get as many as you can afford.
Now, if you were a betting man, when do you think everything is going to kind of implode or explode or whatever? When is the big day coming?
That's the question that is really indeterminate. However, I will say that I think things are sufficiently fragile that if it doesn't happen by the end of this year, I'll be very surprised. I think we could have a pretty interesting fall. The summer, maybe not so much. It's a quiet period and that people can control markets more easily in a quiet period. I think the fall is when things could get very interesting.
Yeah, one of these black swans has to land at some point, don't they?
Well, that's the one thing when I say about the summer. Yeah, it could be very quiet because, as you correctly point out, there are so many black swans hovering around out there that one could basically alight at any time, and that could change the time frame till tomorrow, for example, if one were to take place. And the thing that I follow quite closely now is this whole Syrian mess, because there doesn't seem to be any easy answer to this, and it's engaging the superpowers from the East and the West on the opposite sides. And if something went wrong in the Middle East, for example, and oil prices shot up to $150, $200 as a result, I mean, the thing could be set off the minute that took place.
Do you think that might even be deliberate? Because it's often been a policy of leaders to start wars to take away the heat from their own bad actions back at home.
That's a brilliant observation, actually, because I've thought of that in the sense that you could blame all the financial rot that when it comes home, it's not really because we made mistakes. It's this bloody war that created all the problems. So, yeah, that's a possibility.
It's been great talking to you today, John. How can our listeners, particularly our international listeners away from Canada, find out more about Sprott Asset Management?
They can just go to our website, www.sprott.com, and basically there's all sorts of inputs there, and it's quite worthwhile.
Do you have any interesting kind of projects coming up? Any new silver trusts or anything coming up that people might want to get involved with?
Not right now. We're just basically waiting for the next opportunity to expand our existing gold and silver, physical trusts. And that will happen when, I think, reasonably soon.
Thank you very much for your time today, John Embry.
Andrew, it's been my pleasure.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.